Okay, good morning. Bank of England does not raise interest rates. What do you think about that? Johnny says he's been rewarded with patience. Awesome. Awesome. Good for you, man. I'm cheering for you. Happy Diwali, everybody. Let's go. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I am a humble currency trader. My background is in technical and fundamental analysis, and I am here to serve you. So please ask questions and get involved. Show me a little respect, but also treat everyone else in the chat with dignity. Remember, I'm okay with fun and games, but this is my office that you're in. And that this is my profession, and that we should act professionally. So if you ask questions, I'll do my best to address them. My goal is to help you be an independent thinking trader that has patience and discipline, and that is focused on consistent, low volatility returns and not getting rich quick. I also invite you to visit tradersway.com because you will need to choose a broker one day. Traders Way's fast. The fees are competitive, therefore the spreads, for example, are narrow, but you might want an ECN account. That's cool. The swaps are ridiculously good. Cool. So if you open up a demo account today, you'll experience all those things. Maybe you'll like it. I don't know. You won't know if you don't try. But the thing is, when you're ready to trade real money, you'll already have someone you trust. And trust is important. It's the most important thing. So they earn my loyalty and respect. If you open up a demo account at tradersway.com, perhaps they'll earn your loyalty and respect as well. Tradersway.com. Here we are. Here we are. So inflation in the United Kingdom of 3.1%. And you can go through the monetary policy report and kind of get more details, inflation, but from where and why and from whom and all that kind of stuff. But then they didn't raise interest rates. Even though their target's 2 and they're over 3, they didn't raise interest rates. And as you can see, interest rate hike of 0.15 was already priced into the market. And now they have to unprice it. Okay. Now the next question has to do with the Fed's decision yesterday. And one of the things I thought was good was that there was no taper tantrum. Do you remember that big fear? The big fear, 6 months ago, that the markets would freak out if or when the Fed tapered. And I don't see any freak out, so good. So I thought, you know what? I need to give Jay Powell a little bit of credit for that. Cool. Okay. Right now, dollar's strong. Right now, yen is strong. Okay. Pound's coming down. Aussie's down. Kiwi's neutral. CAD is up and dip. And then euro just sort of doing its thing. So I look at this as a mixed market. And part of it might have to do with the surprise from the Bank of England. Many people are blindsided by that because they just thought it was a foregone conclusion. If you do some basic central bank research, okay? I mean, you actually go to the website, you actually download reports, and you actually read the reports. You don't listen to people on TV. You don't read newspapers. You certainly don't listen to a social influencer on YouTube. Instead, you go to this websites and download them and read them. Now, I have done this myself, and my interpretation of what I read from virtually every, let's say OECD central bank is that they're not raising interest rates soon. Now, maybe Bank of England's in a different spot. We'll have to go through and listen to the press conference starting soon. But central bankers are not in a rush to raise interest rates, which is good for emerging markets, isn't it? So Pat's like, why is the dollar strong today? Is there a risk off now? Dude, you're talking hours, right? You're asking questions about over the last few hours. Central banking policies last for months and years. So I'm looking at it more macro. I'm not looking at yen strength and dollar strength, over the last 12 hours as indicative of these central banks. This is traders trading and portfolio managers perhaps rebalancing or readjusting their positions. But, a 12-hour move is not the end of the world, right? So people need to do what they need to do, and this is what we see. Think of this, Pat, as price discovery. Okay? Think of it as price discovery. Everything, right, needs to kind of go through the supply and demand to figure out the price. And right now, okay, I don't know. We'll figure it out. I'll give you an example. I mentioned this a couple of times. Barron's Magazine just recently had a big money survey, and they published the results of the survey. And 28% of these multi-billion-dollar hedge fund managers and wealth managers, one of the questions they were asked is, when do they think the Fed would taper? And 28% of them clearly didn't even know the answer. They had opinions. Oh, well, maybe out here sooner, later, next year, whatever. But it was a survey. 28% of them, by the way they responded, actually didn't know. Where the Fed actually told us it was going to be in November. Probably November was the language. But they didn't respond probably November. They responded like, let me give you my opinion, which is really interesting because they didn't have facts. So where did they get the opinion from, right? So there are people that have made mistakes. There are people that were, over enthusiastic. And to a good point, like I said, or like I just showed you, England has 3.1% inflation. And interest rates essentially zero. So could they raise interest rates? And yes, they could. Should they? Well, that's a whole different question. And some people had already, think of it this way. When people say it's priced in, they're betting that something's going to happen. They've already assumed that it's happened. So they put money on it based on that assumption. And therefore the price moved and now it's priced in. Well, they guessed wrong. So we need a new price. They need to lose money. Okay? But does it mean it's all over for England, right? That the world is going to start speaking French instead of English? I don't know about that. Jumbo! Okay, so anyways. All right, so I look at this, and there's not a lot I can do right now. I'm going to wait for the press conference. Remember, this week was a big week. FOMC was a big question, or risk event. Yesterday, Bank of England announcement. That's today's big risk event. And tomorrow's big risk event is FX Street, where I do the non-farm payrolls thing tomorrow. So non-farm payrolls, Bank of England, Fed. There's also an RBA report released that now I need to read. And that one was important too. So, and then you should read the BOE monetary report. Like, there's a lot going on. So if you're not in on what's happening, you should probably get out of what's happening. If you're not in on it and you're not prepared like Johnny is, then you need to be more focused. And so, like, if I go back to the Bank of England, let me pull that up. Bank of England. Hang on. Okay. One of the things you should probably do today is wait for it. I guess I can do it that way. No. You need to read this. So if you're not sure what's happening with the pound and it's too volatile and you think it's crazy, you're probably right. So spend some time and you read this. When you read it, when they talk about things you don't understand, write that down. And that could be a future agenda for research. What does it mean when they say XYZ? And you're like, I don't know what XYZ is. So I don't know, Google it, dude. Okay. Then you can go to the RBA, for example. So let me give you some more homework to do over the weekend. Reserve Bank of Australia. And, it's tomorrow. Sorry, but that comes out tonight. So, at least, do you notice that it's on my mind? Oh, this is coming up. This is coming out. I need to read this. I thought it came out. I know it comes out Thursday, but it's there Friday, which is Thursday night. But so anyways, I get all that confused. But look, you need to read that. Okay. You can also read the meeting minutes from the last meeting. You can watch this webinar on recent trends in inflation. Like, oh my gosh, here's what bothers me. Again, talking heads on television, reporters in newspapers, and I don't know, social influencers on YouTube share their opinion. But look, dude, there's just facts here. There's facts. You don't have to have an opinion. You know whose opinion matters? Philip Lowe's. He's the governor of the RBA. That's the opinion that matters. Not your social butterfly that also trades and likes fancy cars and dreams of having a yacht and girls in bikinis. Dude, we don't need that. What we need is fact. And it's just right here. So you could say, well, it's pretty interesting. Interest rates are low in Australia, lowest they've ever been. Inflation is about the same as the UK. And Philip Lowe, if you do some research, and I've done deep dive research, I spent hours just recently going through all this stuff. You know what? He doesn't want to raise interest rates probably ever in his term. And yet, people, fund managers, smart money, billionaires are all talking about they're going to raise interest rates next year. If you do some basic research, spend 1 hour reading this material, you will find out they're absolutely not going to raise interest rates. And he said it specifically. I don't know why they think it. I don't know why they're pricing it in because I have no intention this year, next year, or the year after. So going back to what does this all mean? Suddenly there's strengths and weaknesses. People are making mistakes. They think, but they don't know. And that's deadly. That's a deadly combination. Okay? They think something's going to happen, but they don't know because they didn't do the work. Okay? Can you imagine you're managing billions of dollars and you don't even know the Fed's going to taper in November? Dude, that's just shocking to me. Shocking, right? Just shocking. Almost criminal. All right, so dollar strong right now. So, yeah, I lost money last night. So, once again, I got to back out. No, I wasn't a seller of pound. I don't think I even traded the pound. Euro. See, a lot of these trades, what I did last night, just so you know, like what I was doing, and I don't need to go through every single one of them, but just imagine we were here. What I did is I threw down limit orders and then stops or whatever, right? So we're way down here now. And look, now I get to play with the double bottom on the MM2. Good. So I tried this one. Now I'll probably try that one. And if it goes even lower, I got no more tries until it produces, right? Yeah, it's crazy. Yeah. So, you still got to look at these charts and be grateful for what we're given. It's okay to be disappointed, but we always got to look at what's happening. And the way I see it is this is yesterday's buy zone and this is yesterday's target. It's not bad. Cool. I mean, I wish we were up here at today's target, but okay. This is a long game, This is a long game. So, cool. We're still at support. Anything lower than that, I really got to readjust. But it's okay, man. I get it. NFP, BOE, NFP. We got to get through all that. I'm really looking forward to a great next week. Okay. Again, I would have preferred this, but being down here doesn't change a lot. It's just disappointing. Okay. Cool. So great. Whatever. Let's do our job. So the next one is probably going to be like this, and then maybe a down for NFP and then maybe up. But even NFP, we could have one of these things where let's just say it comes up and then back down, and we're starting here on Sunday afternoon or Monday morning. And I'm like, all right. Well, I've seen crazier things than that. Okay. What you don't want to do is have a giant trade on in which you get whooped, because that would be more than disappointing. Okay? Oh, pigs on the move? Okay. I don't know what you mean by a breakout. So what do I see here? I see is that monthly? Hang on. I think it is, isn't it? Monthly M2, yeah. So here's food for thought, guys. If you were a bull on pound dollar, and I mean over the next 5 weeks, this is the best price you could possibly ask for. Anything lower than this price that we just touched now is probably a walk away scenario. And it did hold. That doesn't make it a buy because that just makes it a lower low on support. So now we got this area here, which I've already identified a long time ago. Okay. And now here's kind of this would be interesting. Let's say we double bottom, we head up, we head down, we head up, and then eventually we break next week. And that would be a change in trend. I'm not predicting it. Right? It's more of if it does something like that, then. So think of it as an if-then statement. If I'm fundamentally bullish on this, or let's say fundamentally bearish on that, then for me to trade it, I will need to see a double bottom, higher high, higher low, that type of thing. Okay? Okay. Okay. Cool. Now, bears are loving it, and bears have the advantage here. Okay. Here was a top. There was a double top. There was a lower high. Okay. You can see the 2155 cross, and it's still being traded. Bears are winning. Okay. Now, they might have been saying there's no way in hell the Bank of England was going to raise interest rates, and maybe that was that. Or maybe they're just trading the price action, so that's cool. Okay. So on many of these trades 2 weeks ago, I took profit and I felt bad about it. Now I don't feel so bad, huh? Okay. My focus has been more on Japanese yen because of the complexities given to us by a change in policy and the debate on what it means versus the US dollar. So anyway, I'm going to keep my eye on euro dollar today and tomorrow and Monday. Kiwi, was this one I bought? No, I think I bought Kiwi yen and that didn't work. But okay, this has come down, and this is me. I was wrong. In fact, I was talking about I didn't see a bearish setup here using Fibonacci anyways. I said I don't see it. So there must be something else going on that I don't see. Okay? I don't see a key pivot point on the weekly, daily, monthly. I don't see a key Fibonacci, or I guess it's a weekly central. Okay, so let's call it that. So it's kicking off the weekly central. So what does that mean? Well, we have a weekly M3 here, which is a sell pivot, and then a central pivot, which is also a sell. This is the counter trend. And by the way, okay, in my training course on pivot points, it talks about in this very, 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 very specific setup, this is a counter trend trade, and that it's likely to go back to the central pivot. So we had the M3 on Monday. By Tuesday, we're here. In that scenario, the standard operating procedure is it will go back to the central pivot, which is interesting. So it did. Okay. So that's that. I just now I'm out. I can't do anything in these scenarios, right? Do you do this live every weekday? Yeah, but only for the last, I don't know. Let's put it this way. YouTube sent me a message this morning that I got a new comment on a video. So I clicked on it to read the comment, and the video was from 14 years ago. So yeah, JG, for only the last maybe 17 years, I've done a daily webinar. Cool, right? Yeah, it makes me rich. YouTube makes me rich. Huh? Those ads, man, those ads. Making me rich. Love it. Oh, yeah, there's plenty of stuff out there, man. Read the description. All right. Aussie. Yo! What? So, did I take this one or not? I don't even remember. Whatever. Okay. I like it. It's one of those trades. It's hard to right? Like, look, I got an S2 out, central pivot out, double bottom, higher high, higher low, roll reversal. And I probably just got knocked out. I think I took this one. Okay, I lost money on that trade. I don't think that's a bad trade. Okay, this is me losing money. Lost money. Okay, which means I was wrong, but it wasn't a bad trade. What if I gave free advice so you can make profit? That doesn't make sense. If I was going to give you free analysis, or if I was going to give you analysis so you could profit, I would charge you money. But I will teach you how you can do your own analysis. Okay. But anyways, JG, do some research. You'll figure it out. Yeah. Read the description below this live stream. I'm sure you'll be able to figure out what's available. All right, USD Kitty CAD. Once again, a disappointment because I want CAD to do well. And have you guys been reading OPEC Plus research? Have you guys been doing that? Okay. We already have a 400,000 barrels per day. Actually, I'm like, that doesn't look right, right? Barrels per day increase, but that's been scheduled for a long time. And they don't want to increase. Okay. Now, I talked about this 1 or 2 days ago in my day trading group. Wink, wink, nudge, nudge. Okay. And specifically, I talked about the game theory of a cartel, because I studied this at Harvard, specifically cartel game theory. Okay, so we could talk logically about what's likely to be reported in the news and what will actually likely happen, which is interesting, right? But nonetheless, no change, which is what I predicted. So let's take a look at oil. And by the way, game theory and behavioral finance, these are things that really interest me. I had a rock star professor, and we were in international political economics class. And 2 of the lectures were on game theory. And I thought, wow, that is really interesting. So then I took an entire class on game theory. And then in some of my graduate work, game theory came up as required reading. I'm like, dude, I already took entire classes on this stuff. But it's interesting. It's really interesting stuff. Richard says, hey, I have a small trading account. How to grow it? What's the best time to trade on? I would say monthly charts and or day charts. And for example, you would buy in March and go and walk away, and then maybe buy again sort of August or September and then walk away. So if you had a small trading account, probably you'd buy once or twice a year and let it grow. Because you have to choose with a small account. And we just had this conversation yesterday, not here, but in my live group. But you have 2 choices, and both are risky. Okay? So first of all, you could trade big. Because even a small lot size, because you don't have any money, is over leveraged. Yes, there's MT4 and MT5, Thomas. So you could trade big. So even like a mini lot, if you only have, $1,000 in your account, well, dude, that's a lot of money. And so you could do a bunch of those trades, but I'm telling you, right? I'm telling you, most people in that situation lose money. It's a cliche. Oh yeah, we got to roll over to the press conference, right? The second one is trade long. Not necessarily buy, but what I mean long time frame. So now your smaller trade will last longer. And no joke, you're going for 1,000 pips. And that's where your return will come from responsible levels of leverage through appropriate lot sizing and letting it run, not just for hours, but for months, maybe years. And along the way, so like you buy in March and then you buy again in August. And maybe a couple other times. So there may, let's say once a quarter you make a trade. But if I said once a quarter, then you need to know things like seasonality, and now that's asking too much. So you make very big trades. Okay. So for example, I think is it Aussie dollar? Let's go back before I do commodities. Is it Aussie dollar? Or Aussie yen? Yeah. All right. So here's 2 trades I've been in since October 1st. Just barely a month. What's the appropriate starting account size? 5 million? That would be a good number. The thing is, everything's proportionate. So if you started with 5,000 or 500, your lot size just gets smaller, 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 smaller. Okay. So like one thought process, for every $100,000 you have in your account, and if that's too many zeros, just subtract zeros. I would trade between 1 and 3 mini lots per trade. You're probably flabbergasted by that. That's so small. Then I look at what you're doing and I'm flabbergasted that you're so over leveraged. Well, yeah, Robin, whatever gets you to the long term, but that's totally fine too, right? But a lot of people, they have no other option. So this is what they got. They got no money. They got no opportunity to get money. So they'll take whatever little money they have and gamble the whole thing. I've read many studies through my, so my formal education is in economics and finance. So whether I'm studying finance or economics, they are 2 different things. Various research through various papers, various case studies, various readings on the psychology of money and investing and trading and capital markets. Like that's all my background, right? That research shows that when you have nothing to lose, you'll risk it all. So someone with that mindset will come in with whatever it is to them, $500, 5,000, 50 grand, 500 grand, 5 million, 50 million. I've seen it. I've seen people losing millions of dollars per week, not 1 or 2, but like 8, 9 million in a week. And it didn't bother them because it was just $9 million. I mean, it's just play money. and someone else is losing $500 and it's their life on the line. But the thing is, if to you got no other recourse, this is going to get you out of jail. This is going to get you out of poverty. This is going to feed your baby tonight. You're going to lose your money. Okay? You're going to lose. You don't have what it takes. You don't even understand the game we're playing. This is a longevity game. This is a patience game. This is a 10, 20, 30-year game. So if you got to get it and you got to get it big, dude, it ain't going to happen. If you look at those that are making huge money as professional traders, what you'll find is that they're risk averse. They're smart, risk averse, patient, structured and organized traders and investors. And that none of it is luck. They actually, the way they trade takes the luck out. And instead, what they produce is consistency. So my goal in November, okay, is to trade 1 to 2 mini lots per 100K and produce 2%. And you're like, whoa, dude, you're trading 1 to 3 mini lots and you only have $1,000 in your account. Yeah, well, you have 100 times more leverage. And you're trying to make 20%, maybe 200%. Well, that's because you got no money. It's not a criticism. It's just you're playing around with the math. Now, the problem is you tell yourself you're going to reduce your lot size relative to your account size as you make money. But what will happen is you'll never get off the crack cocaine of making 200%. So if you make 200% or 20%, let's say to be more realistic, if you make 20% on your trading account in November, you're not going to stop. You're going to keep doing what you're doing. You're dreaming of your yellow Lamborghini, and you're going to end up taking the bus to your shitty job that you hate. And you threw away a better life because you had no patience or discipline to do the job right. Okay? So be careful. Be careful. Be careful. Be careful. I love you and I want you to succeed. But be careful. All right, so let's go find some pig coverage, huh? Maybe YouTube. I don't see anything live going on in YouTube, but they have yesterday's monetary policy report. I'm going to put that and do that one later. You guys want a link to that? Yeah, you probably want to listen to that. Let me give you that. That's not today. That's yesterday. Oh no. Look at that. I clicked on a thing and it came up totally different. Good. This is what we want. So hang on. I might get banned or something.
ITV News. The British economy, the UK economy is being hit by two shocks, isn't it, really, essentially, the pandemic and Brexit. Does that explain why the Bank of England appears to be limbering up to raise interest rates rather sooner than the Federal Reserve of the United States?
Okay, so hang on. You can watch it here.
No.
I'm gonna.
Go away, Joel. I mean, I think.
I'm gonna pause my desk audio.
Some of the things that are going on globally as well in energy markets, for instance.
You probably can still hear it, but that's just coming over my. I don't know if I'm allowed to stream it, so YouTube, I'm trying my best. So if you click that link, you can watch it live while I'm watching it.
As you rightly say.
But I'm gonna listen to it, okay?
In terms of the timing of moves, I mean, I think the best way to frame it, probably, particularly because of the FOMC announcement.
Is it really live? Is it really?
I think we said in
Yeah.
past discussions, because we've used QE differently to some other central banks.
Okay, the stock market's open. I got to go. That was pretty good. They're not raising interest rates anytime soon, and they don't understand why people think they're going to raise interest rates soon. So that's interesting, huh? Yeah, so anyways, if you're in my live group, I will see you later today at 3 p.m. and then I'll see you later today at 8 p.m. And then, of course, tomorrow's non-farm payroll, so I'll be doing my live stream on the FX Street YouTube channel. So make sure you go over there and register for that event. You just click on the reminder and the little alarm, and it will remind you to go over there. Okay. You know what? Maybe we can do this. Hang on. YouTube.com/FX Street.
In here, but if you want more of that, you can always go.
Here it is. You can set up the reminder here. Cool. So, peace on earth, may the pips be with you, may your profits be above average. That just happened.